Good afternoon. Welcome to this week's market update. Tech led the U.S. equity rebound last week as the NASDAQ added 3.9% and finished Friday at a new all-time high. The S&P 500 remains in striking distance of a new record after jumping 2.4%, while the Dow grew by 1.3% last week. Earnings season has been stronger than expected, with nearly 90% of the S&P 500 having reported thus far. 82% of those companies have beaten projections, with 9 of the 11 sectors netting positive earnings growth. Another factor that aided stocks last week, specifically the tech sector, was more exemptions being unveiled on President Trump's latest round of semiconductor tariffs. Bond yields rose last week after the U.S. Treasury auctioned off $42 billion of fresh 10-year notes and $25 billion of 30-year bonds. Weaker than average demand caused the jump in yields, with concerns surrounding the U.S. budget deficit likely the driving factor. This week, additional inflation data is set to be released in the form of the July PPI and CPI indices. Coming off a lackluster July jobs report, we will be monitoring upcoming economic data very closely. CME Group is now reporting an 87% chance of a September rate cut. Despite the high likelihood, hot inflation reports before the next meeting could quash any hopes of the rate reduction process getting kickstarted. Thanks for tuning in. Have a great week.